Hello, YouTubers, friends, compatriots, bootlickers, shills, desolators, peasants, vassals, minions, Euro trash. I'm a useful idiot. Welcome, and today I want to talk about the Eurozone. And I did a series of videos, I think probably 6 months or a year ago, about all these European countries that, for all intents and purposes, are actually in a depression. And even though we get this constant mantra about recovery, both in the United States and the Eurozone, all these countries continue to be in a depression, and those countries in Europe that weren't in a depression are going to be in a depression. So everybody, I think, has seen a lot of the big headlines, and so I'm going to paint this in broad strokes about the Eurozone being in a depression, and also I will attach my previous videos, country by country, that has a lot more of the gruesome details. Nothing much has really changed, other than further deterioration and a couple of dramatic bank bailouts. And but overall, after 6.5 years, Eurozone GDP is still 1.9% lower than the pre-crash levels of 2008. So complete and utter stagnation when you factor all these countries together. And of course, there's been a lot of drama over the years because Germany has been booing the entire Eurozone system, and Greece has been dragging it down. Well, Greece continues to drag down the Eurozone, but Germany is no longer going to be the stalwart powerhouse keeping the whole thing afloat. So let's start with Germany. So first of all, they're the Eurozone's largest economy, and now in the second quarter we have a contraction. 0.2% contraction in the German economy, so no growth. Factory orders dropped 10% across the Eurozone, and very low inflation. So the target of the ECB and Draghi and all their extraordinary financial gamemanship going on has resulted in zero inflation to speak of. And that's the only thing that's going to get them out of this debt cycle. And instead we have these deflationary forces keep pushing. And of course the most dramatic results of these deflationary forces have been in a country like Spain, where their entire real estate market has had a severe collapse. Spain is in a deep depression because of that. And another thing that came out actually is that revisions from 2013 show that Germany has already had a double dip recession. So that's something that's been buried in the news, that Germany's been struggling for a little bit for a while now. So they've already been in a double dip recession and had a contraction and a standstill in their economy for some time now, at least the last year and a half. And now, of course, we're going to see the repercussions of these Russian sanctions as well, which are going to hurt German economy more. In fact, it's going to hurt all these Eurozone economies when they can least afford it. And so then we go to France. This is the second largest economy in Eurozone. Their second quarter, zero growth. So their economy continues to plummet. Once again, we have low inflation there, although just like the United States, there's high inflation in a couple of key things, but overall there's low inflation, and in fact we have deflationary forces going on in France as well, which will continue to put pressure on their entire economy. And so the two of the biggest powerhouses in Europe are faltering, and in fact, turns out all three of the powerhouses in Europe are faltering because Italy is now a mess. In their second quarter, they also contracted 0.2%. They're having a triple dip recession, and GDP has been negative in all but the last 11 of the last 12 quarters. So if that's not a depression, I'm not really sure what is. GDP negative in 11 of their last 12 quarters. Just like everywhere else, they have low inflation, so they're not going to grow themselves out of this using inflation. Deflationary forces continue to put pressure on their economy. They have 2.1 trillion euros in public debt and a debt to GDP ratio of 135.6%. So they're in the company of countries like Greece. And another financial scandal that's going on involving Greece's economy is Italy's economy is Italy owes $102 billion to private suppliers. You know, these bills have been unpaid for some time now. They've been promising to pay by the end of the year. They just moved it again. Promised in March. They previously promised in March to pay by July. Now they're promising to pay by the end of the year, and this is something that's been pushed back for years. And so this $102 billion that they owe to private suppliers continues to build up, and it's going to continue to be more of a liability. And it's already causing bad feedback loops because these unpaid bills cause layoffs, closures, and bankruptcies of a lot of businesses in Italy. And this only continues to create this vicious cycle. And also, it's accelerating privatization in Italy. So that's something that we've come to expect in Greece, this massive privatization of state assets and sell-off, a fire sale to the elites. And we have the same thing going on in Italy, where we're having an acceleration of privatizations. And we're going to see more of that in Germany and France at some point as well. And then we get to Portugal. Portugal has been off the radar, but they're in worse shape than a lot of these countries because they just had another banking crisis. And in fact, there's a bailout 3 weeks ago after the bank was declared fine 3 weeks previously, and then it got a bailout of $6.5 billion on August 5th. The Banco Espírito Santo. And it's gonna cause a huge, giant crater in the Portuguese economy. In fact, one expert said it could lead to a near 8% contraction in GDP when all the losses are tallied up, and the losses from the bank will be much larger than that eventually. So bank bailouts are still going on, and we still have economies cratering. And one of the things about Banco Espírito Santo, the bailout as well, is that they've talked about the idea of bail-ins and taking these losses out on senior bondholders, senior shareholders. But that doesn't go into effect until 2016. And there was some thought that they might do it in this case, but no, all these senior shareholders are going to be covered, and the taxpayers of Portugal are going to be on the hook for bailing out this bank. And on top of that, they're going to need another bailout of roughly 25 billion, and they also have a new round of austerity coming up. So much more damage to come in Portugal, and watch for another ECB bailout of Portugal in the midst of this so-called Eurozone recovery. Portugal, like all these other countries, has a debt to GDP ratio that jumped from 94% to 132% just in the last 3 years. So like all these other countries, they're going in the wrong direction, piling up this debt. And then, of course, the bailout will only exacerbate the situation like it has in Greece. Look at Greece. They've gotten 240 euros in aid, mostly gone to the banks, and they're still the sick man of Europe. They have Greece has 27.4% unemployment, 52% of that, 52% unemployment for those under 24. So a complete lost generation. 3.8 million living in poverty, 400,000 more than last year. 350,000 households with their electricity shut off for non-payment. 30% of the population has no access to health care. Universities are shutting down. As you would imagine, if 52% of those under 24 are unemployed. 21 continuous quarters in recession. So how can anybody say that Greece is not in a severe depression when it's had 21 continuous quarters of recession? 34% of the population is threatened with poverty. They have a debt to GDP ratio of 157%. And I remember some of these efforts were designed to theoretically get debt to GDP ratio down to around 120%, but they're still 30% off and rising, while other countries join them in the echelons of being broke. And that's not to mention some deterioration in Ireland again, as well as Netherlands, and a number of other countries that are also having struggles that just aren't on the radar. But all of the Eurozone is having these struggles one way or another. There's really no recovery going on there. It's a fake recovery, just like the one in the United States. And we have a bunch of broke governments helping out broke banks, and the broke banks are helping out the broke governments. The whole situation is going to be exacerbated by these sanctions, and many of these countries are going to find loopholes around it. And then we have a new round of austerity going on in all these countries, including the ones that are already suffering, like Portugal, Greece, and Spain. And now we're going to see more efforts in France and Germany and Italy. And then we see, just like in the United States, the utter failure of these financial experiments by the European Central Bank, and the failure of the QE, the failure of quasi-QE. And once again, there's nothing to show for it in the Eurozone. And we will continue to see further deterioration and further extraordinary measures taking, and the cycle will continue. And the Eurozone will end up being like Japan, with this constant decades of deterioration and more Keynesian madness, the government taking on more debt, the banks taking on more debt, and more bailouts, more failures, and more depression to come in the Eurozone. I'm a useful idiot. Don't you be one too.